Hello everyone, this is KJ from Average Capital. Today is 7th November 2025 and welcome to our second video. In the previous video, we discussed about our perspective on BTC and where do we expect it to head in the next 12 to 18 months. And since the previous video, it has fallen substantially. It has come down around 6 to 7%, and it's working its way towards the bottom. It's going to be a slow grind. It's not going to be a straight downwards movement, but everything is going just as we planned. And we have put up a line here. If, as you can see on the right side of the chart, there is a vertical line. We've put it here as a time duration between which we expect the market to fall. So of course this is approximately 500 days, but we don't necessarily expect it to go as far as that. It could also end up uh, um, after 365 days, that is 1 year. But we are going to have an open mind. From 365 to 550 days we are going to see a bottom, and that's what our model suggests. And this is working just as we planned. Now of course, if we come to the daily, it looks very chaotic, and it also, the RSI is falling. It doesn't look very good. It has broken down the supports. The moving averages are also broken down. And as you can see, since the beginning of this particular bull market, we have held through the trend line, and the trend line too is broken. And one could argue that we have done that before. So if you adjust the trend line a bit, then also you can see, yeah, we did momentarily break down the trend line in the past. But again, even if we did, we always close the week before we close the week above the trend line. So you can see, here we close the week above the trend line. And if you put it out to the latest, the last dip, we must break we must hold the trend line and close the week above 110, $110,000, which we don't expect it to do. And it is not really uh, very strong right now. The momentum is very down, and the sentiment of the market is extremely bearish, and people are really panicking. Many people are selling. As we can see, big institutions like BlackRock are selling their holdings in the fear of having to hold through the next 12 to 18 months, or possibly longer, from their perspective. But we are very certain that it is not going to be permanent damage to BTC. It is just, again, same rinse and repeat, the same cycles which we have seen in the past. It is going to keep happening again and again. What happens beyond the cycle is not quite sure. We will of course be connected with you guys and update on our portfolio and what we are planning to do. But as of now, things look very very good. We are sitting on a lot of shorts, and any fast move down to 80, 85,000, we are going to book some profits. But that's for our trading account, and we can possibly have a future video on specifically on trading and how we are managing our trading accounts. The previous one was primarily based on the longer frame investing portfolio. So now we'll head over to the US equities, which is today's topic of the video. And let's move on to S&P 500, and we'll begin from there, and then we'll move on to the other indexes like Nasdaq and Dow Jones Industrial Average. And we'll have a look what US equities hold for us, and how are we navigating our portfolios in that domain. So here we are at S&P 500. This is the main index in US equities, and we have begun with the weekly chart. And as we progress in the video, we'll move to the monthly, and then we'll close the chart with the daily, and then we'll move to the other indexes and show you what we mean to do with this index. So just like BTC, we expect the markets to not do very good in the upcoming year, and that is basically going to be our time frame for these videos. We are going to look at the longer term and not look at the shorter term like the dailies. Probably we could do a trading videos and include the options in it, but for now we'll stick to the basics and stick to what our majority of our portfolios are doing. So US equities, we've been very bearish on it since the Q4 of 24, Q4 of 2024, this area. And we were very certain that the markets are very bearish, we're very speculative, and things were getting out of hand. And we wanted to short the market, and at the same time we were also short on Bitcoin and various other assets, which we will cover in the future videos. Uh, Now the thing is that we had a very very major sell off due to the Trump tariff news and how market reacted was actually very harsh. We didn't expect it to go so down and so brutally with such a high momentum. We came down as much as 21% down. This is not something which we expected. So most of the targets which we had for our shorts were all taken in to profit, because during the bottom of these of April 2025, the prices had fallen so low that we just couldn't hold on to our shorts. We had to close them very quickly, because the markets was too overextended on the downside. And in fact, even if we were bearish in S&P in the long run, we had to switch from shorts to longs, and we started buying longs on the market. And we were playing the market expecting it to rally very fast, and it did, and that also paid us off very wonderfully. But the only caveat is that when we expected the markets to come down somewhere around the 5500 mark or 5400 mark, and by the 5200 mark we were out of our shorts, all the profits were booked. But after that, when we saw this extremely fast dip down to the 4800 region, we basically started loading up on the longs. And by the time we came back to the top, we had sold most of our positions, expecting the market to not particularly rally any much further. And even if it did, we wouldn't be comfortable holding our longs. And after that, the market, of course, behaved in a very unrealistic manner, and we can also understand why that happened. Since it came down more than we expected, it's supposed to go up more than it's expected. So that's just like a pendulum. If it swings too much on the left, it has to come back too much on the right. That's how the market works. At the end, it has to come back to reality. And the reality was to the near this region, as you can see my cursor is. But since the market was overly stretched down, it had to overly stretch up. But we didn't have a play in this. In fact, as the market continued to rally, we again became bearish, and that's where we are today. This seems like the top of the market, and we expect the market not to rally anywhere above this point, 6900, not to cross 7000 uh, for S&P. And we expect the market to move in a very brutal way towards back towards the 4800 region within the next 12 months. So basically, we are planning for a bear market, which is going to be very brutal, more brutal than how it was during the April crash. And that is what how we are playing the portfolios. Most of our money we are going to put it in shorts, and we are basically completely out of the market. As the market kept grinding, we had to take profits and sell most of our longs. And by the end, we were completely dried out, and there was nothing left to sell. And of course, that's a problem, but a very good problem to deal with. And we don't mind being sitting out of the market if the market is behaving completely irrationally. We are very comfortable sitting on cash, and we're waiting patiently to deploy our capital when the right time occurs. And it, of course, doesn't mean that just because other legendary investors like Warren Buffett are doing so, we just have to copy their style. But it also gives you a little credence that visionaries like them are also on the right side. And recently, this few days back, we heard that Michael Burry has been doing the same thing. He was loading up on Nvidia and Palantir puts, and nearly 60 to 80 something like that percentage of his portfolio was in just two companies options. And that is extremely careless in our opinion. But of course, that's how he's been doing. He's infamously known for his big shot in during the global financial crisis. So, to look at the bigger picture, we'll move towards the monthly chart, and then we can have a look at explain to you what we mean, and why we are so bearish on the US equities in general. Uh, as you can see, if we were to reach a 4800 region, it is somewhere around a 30% decline. That is a huge decline. It's way worse than what we saw during the 2021 to 2022 crash. That was somewhere around 27% drawdown, and here it is going to be 30% drawdown. So of course, it's very bad. We are going to come way below the 50-day moving average on the monthly. Something as bad as the COVID crash. And this may also not be very fast, just like we saw in COVID. It just came down in 3 months. Here it's not going to be like that. It is going to take a lot of time. It's going to uh, take 12 months to reach here, and that's what this vertical line represents. That by the time, nobody knows, to be honest, where exactly we would end up making a low. It could be 4800, it could be 5000, or it even could be a little lesser, like coming somewhere down below the 4600 or 4500. But of course, as we move towards the end, and as time progresses, we will update on how our models indicate and what our analysis compels us to do. But we completely have to stay vigilant and stay unemotional from the fact of the situation and what the news is flowing. Like today, if you see, the news is amazing, everything is great. The US market is doing good. Trump administration is congratulating itself, and everything seems rainbows and sunshine. But uh, mm, particularly for us, we love to go bearish on such occasions. So we're going to patiently wait for the next 12 months and load up during these areas. Now, if you can see, we were talking about 4-year cycles, and how the cyclicality of the markets are always relevant, be it cryptocurrencies or US equities. And we can see here as well that such cyclicality is not something which is specific to BTC. It is can be seen here in S&P 500 too. So if you can see, each cycle has delivered, if you measure from bottom to bottom, it has been around 4-year cycles. Now of course, as you move behind, and you keep going towards the financial crisis, the patterns and the time frames start becoming very not very clearly visible, and it's hard to put up the exact numbers. But you get the idea that the cyclicality of course breaks down during the crisis, because that was a different type of an era. We were having more secular market, that we would go up for around for more than a decade, like 1.5 decade, we have gone up. And that is a different kind of an animal to deal with. But what we are moving towards is a different kind of an animal. It is more cyclical, the future is cyclical. And for the reasons which we may not be able to explain entirely in the short duration which we have here on the video, that why we are going to have a cyclical future, and more cyclical than it has been. But the market in the prior 30 years has been very profitable, to be just a hodler, or they say, or just like a coffee can investing, when you put your money in just one basket and just hold it out for years and years and years and decades, and any dip is not supposed to be worried about. But we are at the end of that philosophy. In the future, it's not going to what got you here is not going to get you there. That's what we believe here. And the future is going to be very cyclical. You have to play these cycles. Anybody who is a long term investor, who believes that we just have to buy and hold, and hold the asset forever, is not really going to get the best out of what he can get. And what that's what we're here to do. We're here to provide some alpha, obtain the best possible return which we can, safely, without putting our assets at risk. And this is what the cyclicality of the market. It's not as obvious as you see in BTC, but of course BTC is again, it is ahead of the equities. If you can see on daily charts, and if you compare the two, you will see that there has been it acts like a torch bearer, if that makes any sense to you. But basically, by from the last cycle low to the current cycle low, which we expect it to be, it is going to be somewhere around 48 month to 50 month mark. To put it on a round figure, we have put it somewhere around the end of 2026. It could be 2 months up or down, and we're not dealing with certainties here. Rather, we're dealing with the possibilities and the probabilities, and that's what has helped us generate the profit here. Now, if you look at the daily, and we try to analyze what kind of a path we are going to take, going to be a roller coaster ride down. It's going to be a very bumpy ride, up and down, as you can imagine. So I'll just quickly remove this. So even if we are heading towards the 4800, that's our primary target right now. uh, we don't expect it to, of course, go in a straight line down. But but getting below the 200 200-day moving average, or somewhere around 5800 within the next 3 months, is not going to surprise us. So we actually should expect a lot of volatility in the market in the upcoming months, upcoming weeks. If you see, it is around 3 months duration. In the next 3 months, we are going to see a huge fall in the markets. That's what we are expecting, and that's how we have positioned our trades. We do expect a 15% drawdown in the next 3 to 4 months, and that's a lot. Honestly, if you think about it, even to get to the bottom of the tariff crash was very scary, and that too was just 21%. So if we're getting a very similar drawdown now, that's a scary thing to say, but that's how we are heading, and that's what how we are going to play our options and how we are going to trade it. But we are not going to buy the assets, we're not going to go long, we're going to stay bearish uh, until the end of the cycle, and that's when we load up and completely have a 180-degree switch and move towards the next cycle and expect the same thing, rinse and repeat. And that's how we are going to play it. Since the video is getting too long, we'll probably put up another video on Nasdaq and Dow Jones, and so I think that will be all for today, and thanks a lot everyone for watching, and we'll soon update you with the other markets which we think are interesting and how we are navigating through them. So thanks a lot and good luck. Take care. See you soon.